Ladies and gentlemen, boys and girls, you're watching another episode of the Engine Room Podcast on YouTube, brought to you by tokenmetrics.com. If you're watching this video and you like what you see, please be sure to subscribe to our channel, give this video a like. We also want to say a special hello to our audio-only listeners. There are only a few of you out there, but we know you're out there. So Token Metrics Nation, Token Metrics Underground, whatever cute name we arrive at in the future, we appreciate your subscribing and your support. We're going to do today what we've done many times before. It's Dylan and Jacob with you, of course. We're going to talk about some of the items in the crypto news cycle today. Three big things to cover. Gibraltar Stock Exchange has some crypto-centric news. The NFT market, surprise, surprise, it's bigger and bigger every day. And then the good old economic fuddy-duddy Nobel Prize winner Paul Krugman, a notorious Bitcoin bear. He's back in the news with some negative commentary about crypto at large. So, Jacob, what's up? Let's talk about some of this stuff. I think we should start with Gibraltar, the Gibraltar Stock Exchange, because that's pretty exciting. So I broadly understand that we're talking about somebody's buying the entire Gibraltar Stock Exchange and is going to make it into a crypto pursuit.
Yeah, exactly. So blockchain company Valerium said on Friday today that it's going to buy 90% of the Gibraltar Stock Exchange. GSX is the ticker for the exchange, to create the world's first foreign exchange where shares, traditional legacy shares, and crypto assets can be traded. So that's really
that's a pretty exciting thing.
Yeah.
It sounds pretty serious, and it also, we should be clear that it's the early days of this thing happening. We don't know many details about what this is going to actually look like as it becomes official, because this is happening right now.
Yeah. So there was no, right now in the article it says it gives no price for the transaction, but you looked it up and said it was $2 billion.
So yeah, the market cap of this exchange, it's a smaller exchange. It's less than $2 billion. What's that exact number? 1.845 billion. So $1,845,000,000, and they're going to buy 90% of that. So that's a huge chunk of change, of course, but that's realistic money. Like institutions that are active in crypto, they have this on their balance sheet. They can make these kinds of plays. So if anybody's interested, if anybody comes from the legacy world and is curious about any happy intersection there between crypto and legacy, this seems to be a pretty exciting one. A full-on stock exchange going crypto.
Yep.
We'll see what actually happens in the future. Anyway, moving right along, we've got a report from Delphi Digital that the number of NFT transactions has doubled in a month. This is interesting to me because obviously crypto price action has been a little disappointing. If you're watching this far in the video, and you've been trading crypto throughout this week, we're with you. We're all looking at the same market. We feel your pain. But Jacob, this news is pretty interesting to me because at a time where crypto altcoins seem to be moving sideways or down, NFTs seem to be moving quite distinctly up. So if the number of NFT transactions has doubled, it's probably going to stand to get bigger after that. What does somebody like me need to know? If I've never bought an NFT, how can I make my decision about throwing my hat into the NFT market if I'm already trading crypto?
Yeah, well, first I want to correct you a little bit. It's the number of unique wallets has doubled from 5 months ago. Unique wallets. So not just transactions, but number of new people holding or buying NFTs. So it was 190,000 unique wallets in August of 2021. It's now 380,000 unique wallets in January of 2022. So that's like you said, that's showing that there's a huge interest, a huge spike in not just unique wallets, but also transactions, like you were saying, while the broad crypto market is experiencing a downturn. Well, we're seeing a lot of red. People are maybe just putting their money in NFTs. I mean, maybe are we seeing an equivalent to people buying art as a way to, like, physical art before crypto or NFTs was a thing, as a way to fight inflation or as a way to store some money? So yeah, I do think that's super interesting. But yeah, back to your question.
So yeah, walk us through this idea of, I'm tired of trading crypto and altcoins moving up and down, and mostly down lately. I want to try this new NFT thing. How does somebody actually open that door if they've already got some crypto trading experience?
Yeah, for sure. So there's a lot of steps. First of all, you need an OpenSea account if you're trading Ethereum based NFTs. So make an OpenSea account. Then I would say make a Twitter account and try to follow NFT space, because a really easy and quick way to find exciting and new NFT projects that haven't minted yet is through Twitter. So you go get a mass following, follow a lot of people on Twitter, kind of go deep dive into the NFT space on Twitter. Also, you need a Discord account, because a lot of times to get whitelisted or a pre-sale of an NFT project before it mints, you have to be active in the Discord or win a giveaway. So you get your wallet whitelisted, so then you can mint the project before the public can. Because a lot of hyped projects now, they have whitelists, and if you're not on that whitelist, the public sale sells out within like 5 seconds, and you probably just are going to end up losing some gas from a failed transaction. So yeah, once you have, obviously you need an Ethereum wallet, so MetaMask, Coinbase wallet, whatever, you connect your wallet to the site of the NFT project. You need an OpenSea account. Twitter, Discord is what I'd recommend. And then, yeah, you just start finding projects that you like, have a good amount of followers on Twitter, have a good community.
Let's use this as an opportunity to plug your NFT newsletter, because after you have all those materials in place, then you need information about what to buy and why you're buying it and why you might expect its price to appreciate in the future.
Yeah.
So what can you tell us about your new NFT newsletter?
Yeah, exactly. So like I was saying, I'm already doing all this. I already have a Twitter account where I'm deep diving. So if you, obviously a lot of people don't have time to spend hours and hours and hours looking at NFT projects, seeing which ones are high quality, have good investors, a good team. I'm already doing that. So that's why we've now created an NFT newsletter where we give high quality, 3 to 4 high quality, already minted, post-mint NFT projects. We give them a score, a fundamental grade, like we also do with crypto projects. And we give 3 to 4 pre-mint projects that you can follow along, maybe try to get on the whitelist. So yeah, that's going to be coming out weekly. So make sure you're a Token Metrics customer to get this NFT newsletter, so that can really kind of accelerate your involvement in the NFT space.
Yeah, I know I'm super curious in NFTs. I'm a little burned out on trading my altcoins, especially after the new year. So I predict the timeline is short until I buy my first NFT.
Yeah.
Let's quickly hit on this last bit of news that we've got today, because famous fuddy-duddy economic warlord Paul Krugman, a warlord of the mind, he's in the news today for basically poo-pooing crypto at large. The major soundbite that people are latching onto from his New York Times editorial is that crypto has disturbing parallels with the subprime mortgage meltdown from 15 years ago. So, look, you're listening to a generally pro-crypto podcast here. We're going to talk about why he's wrong, but also this guy has a Nobel Prize in economics, so he can't be completely wrong. He has to be a little bit right, at least I think. But the subprime mortgage crisis had to deal with specifically making large loans to higher risk people whose finances it's not 100% they're going to pay that money back. So if I were going to put a large blanket criticism against this idea, it's that crypto isn't lending. When you buy stablecoins, when I buy stablecoins on Coinbase, KuCoin, whatever, that money leaves my bank account. And while there are certainly ways that you can get into leverage and margin trading where you are making plays with money you don't actually have, I mean, the same is also true of the stock market. I would hesitate to say that crypto as a singular entity resembles a subprime mortgage crisis. If anything, crypto as a single entity resembles the stock market that's already up and running and functioning every day. So yeah, there's my blanket criticism against why I think Paul Krugman is kind of happy to muddy these waters. It bears mentioning that he's got a long time anti-crypto history as well. He doesn't like it, and that's very clear.
He's called it a Ponzi scheme before.
Yeah. I mean, while it might even feel that, you know what that really means, Jacob? It means he bought Bitcoin and sold when it went down.
Yeah. that bought high, sold low. But yeah, I do, like you mentioned, I do think it's important to maybe say why he's right. So like you mentioned, he's wrong because crypto, it's not loan based, and that was a big fault and flaw
it's
of
part of it, not all of it.
But I do think one of his points is that, similar to the housing crisis in 2007, 2008, big banks were selling risky assets, speculative assets, to investors who didn't have a big risk appetite, who couldn't afford to lose money, who also didn't really know what they were buying. And that's one way which I honestly do see parallels between cryptocurrencies. Cryptocurrencies are speculative assets. They're definitely risky and volatile, and a lot of crypto retail investors don't really know what they're buying. So I do see a parallel to that. Obviously, I disagree with him, but we do have to give him some credit there and say, okay, yeah, maybe he's not completely wrong.
Yeah, he can't be completely wrong. He's too smart. And what is an economist? It's somebody, a big part of their job is having an idea and then defending it, I think. And he's got a Nobel Prize basically in intellectual boxing,
and a Nobel Prize in studying the market. So if he says, I see a parallel between two markets, he's not going to be completely wrong.
We acknowledge you, Paul Krugman. You're welcome on the podcast anytime to elucidate your point. With that in mind, that's the three most interesting things we found for the crypto news today, from Dylan and Jacob here at this Friday edition of the Engine Room Podcast. Thanks for listening. Don't forget to like and subscribe to this video. If you like this YouTube channel in general, you should know that we go live 5 days a week. If you're trading crypto and you want a little bit of insight on what the market is doing on a day-by-day basis, well, you got to meet our man, Bill Noble. He is single-handedly doing a pretty interesting live stream 5 days a week. Hit that bell so you can know when we go live and you can meet Bill and basically ride his coattails and make money in the market. Anyway, we'll see you next time from Dylan and Jacob at the Engine Room Podcast. Bye-bye.